Natural gas last week continued to trade bearish. It has hit the lows at 1.83. One important observation from this drop is it has filled the gap from the rise has started post the drop in COVID. See, this was the gap it has filled precisely at 1.85. Now, can we expect net gas to move towards these double bottom levels of COVID times, that is precisely hitting 1.5 levels? Or the gap filling is done after 4 years? Can we expect a reversal? What is going to be our strategy trading net gas in the coming week? We will see with the help of charts and indicators. If you're new to the channel, subscribe and press the bell icon to get the latest updates. Towards the end of this update, I will give you the trading strategy. Do watch till the end. And yes, do like, share, and comment, friends. Your every like, comment, and share is a great motivation for me to deliver twice a day updates on natural gas. I do share the update first with the Asia session, next with the US session. Do watch both and press the bell icon. Let's start. First, charts and indicators. And yes, if you've not joined the channel memberships, be a part of the channel memberships and enjoy the benefit. Now, first, let's have a look at the monthly charts. On the monthly charts, one important observation here is see what are the lows here which gas has seen. 1.832, levels. Let me zoom in a bit precisely here at 1.832, zone. And let me take you to the history here towards 2021, 2020. In 2020, we have seen gas giving a breakout and there was a gap which was left to be filled. Now, where is the gap left? You can find out beautifully the same zone 1.832, 1.834 was the lows. It has beautifully achieved the zone here. Can we expect oil gas to bounce back from the current levels? Now, see, this was the year 2020 when it has also formed a double bottom. Since then, we have seen a very strong rise. Now, the prices are trying to trade further lows. Now, on the monthly charts, if you look at moving averages crossing over here, trying to trade with divergence and bearishness, prices dropped here, retrace, and now again looking downwards. Also, if you look at the preceding candle comes with a bigger wick on the upside, and this candle has started flat. Thus, it suggests it has still a bit of downside available. And only reversal confirmation is if it trades below beyond $2.2. Right now, it appears it has filled the gap, and this was the breakout levels. Thus, if it trades below 1.8, then we can say that in the near term, we can look forward for it to hit the double bottom levels at 1 point. Chances for which appears to be less though. Stochastic has also come to oversold levels. The MACD is trading with extreme bearishness. It is trading with divergence. It is looking downwards. I expect it to show the signs of convergence here, but right now it is not showing any signs of convergence. RSI is looking downwards. Let's look at the weekly and daily charts to take a better view of what can be expected. If you look at the weekly chart, see up first of all a sharper reversal, then a swing, then first red candle, and I have mentioned that if it trades below this zone at $2 levels, we can expect it to move towards 1.8, and precisely it has done that. Now, if you look at this is increasing body size. Also, if you look at the expanding triangle here, thus a possibility of a reversal exists, but it has to now stay above 2.06, 2.1 zone for a confirmation of rise, and 2.2 for a confirmation of reversal. Right now, if you look at prices are trading with too much of divergence from the 20 period moving average. Yes, it has retraced here. It is looking forward to lower lows and trying to trade bearish. 1.8 is certainly going to be a great support. If you look at the stochastic, this has also come to oversold levels. It suggests that a recovery has to be there. The MACD only is the sign which is still divergent. It has just crossed over a few weeks back and it is divergent. It is bearish. It is looking down, suggestive that the bears are not yet done with. However, I look at the moment here, a recovery rise was seen, retraced here, and a crossover here can lead to the reversal. RSI looking downwards. Coming to the daily. Now, on the daily charts, important observation, look at the consolidation zone between 2.06, 2.1, then the sharper break, and it is showing a reversal sign towards the end of the week. Now, after a bearish run, it is showing a sign of reversal, which suggests a possible retracement towards 2.05 levels in the coming week. Possibility is there that we may see it retracing, even if net gas is bearish, it can try to retrace towards 2.05 levels, and from there a fall again towards 1.8 cannot be denied. Now, see, since we have seen that it has filled the gap towards 1.83, possibly this could be the bottom which net gas was looking forward to. However, it is not yet sure that because on the monthly chart there is little more room for it to go. Thus, it is going to be very important for us to observe how gas behaves at around 1.8, 1.85 zone. I do not think that yes, see, it is going to remain sideways. First of all, that is what is my expectation. 1.8, 1.85 zone should be a greater support. However, since we have seen the drop in the last couple of weeks, it appears that if it stays below 1.8, that is where the further accelerated bearishness can be expected. For the coming week, I expect it to retrace a little towards 2.05 levels, and from there a drop cannot be denied. Stochastic again back to oversold levels on the daily charts. MACD is still bearish divergent. RSI is oversold again. Thus it calls for it to show a pullback. Prices are trading with divergence from the 20 period moving average as well. Coming to 4, if you look at the movement here, prices always try to retrace towards 20 period. Again, it is divergent from the 20 period and it can converge. Right now, the 20 period moving average sitting at around 1.95, 1.94, which is going to be the immediate resistance. Beyond that, $2, first important psychological level, then 2.04, 2.06, which is a greater resistance for gas to break past by. Now, if you look at the last few candles here, you will find that gas has found its support here at 1.83. Since then, it has shown a rise, but it is also forming lower highs. Thus, now in the coming week, we have to now wait for it to break first beyond 1.9, then 1.92, and then 1.95. If these three levels are taken, consider that it may now try to break beyond 2.0406 levels as well. Thus, if you see gas trading above 1.9496, you can just stay bullish. It will try to move towards 2.0406 zone as well. Stochastic on the 4-hour charts is rising. MACD is showing signs of convergence here, which could lead to a rise. RSI is also coming out of the oversold zone, which is a sign of a reversal. See, this is an ideal point for you to buy possible. Now we have seen the charts, we have seen the indicators. Time for me to give you the trading levels and strategies so that you all can trade profitably. Before that, if you want to learn this art of trading, you can join my 29th mentorship batch commencing in a couple of weeks, or you can be part of my Signals channel on Telegram. For any of your queries related to the mentorship batch or the Signals channel, you can write an email to me or you can ping me on Telegram. The contact details are shared in the channel and video description. And yes, if you want to get the live market updates, you can join the free Telegram channel or visit my platform forexhonda.com, where you get all the market related data, and also the community of traders is there, and also you can book a call there with me if you need any consultation or guidance during the live markets. With that, let's talk about the levels to buy. I will recommend you to buy here at 1.9. Remember 1.9, 1.92, and then 1.95. This is going to be the first hurdle, and as soon as gas breaks past this zone, certainly the bullish momentum will increase. Beyond this, I will be looking forward to 2.04, 2.06 zone. Now, what we are talking about is, see, from 1.88 level to 1.95 itself, 4 to 5%, and then from 1.95 to 2.05 levels, another 4 to 5% rise. So almost a 10% retracement from the current levels cannot be denied. And if it stays about 2.0406 is where we can look forward to 2.1 as the first hurdle. And then it will try to move closer towards 2.2 towards the end of the month, such that it can resume the reversal from the next month onwards. Right now, it is not showing any signs of a complete reversal. Thus, a retracement towards this zone or this zone can be expected. Achieving those levels, possibly a reversal towards the next week can be expected, or it can again turn bearish. Thus, you have to be very cautious as long as 2.2 levels are not breached on the upside. On the downside, where you should sell, I will only recommend you to sell here at 1.85 levels, below which we can look forward to 1.83. And if it trades this 1.83 levels, we can look at 1.8. Now, this is going to be the support level which gas needs to breach. Below 1.8 is where again the bears will take over, and then we can look forward to 1.77, 1.745, and then 1.7. Now remember, staying below 1.8, the chances for it to move towards 1.5 in the near future means couple of months down the lane, is existed, though I'll be looking forward to a reversal which right now gas is showing no signs of. It is consistently, continuously trading bearish. Last week again, it has shown increased bearish momentum. Let's see if this week we see a bounce back. I see that it has found its bottom towards 1.83, and thus from the current levels a little retracement on the upside can be seen. Take your positions accordingly. Like, share, subscribe, and comment. Do watch the twice a day updates which I share for night gas. First with the Asia and Europe session, next with the US session. Thank you very much. Have a great profitable trading week ahead. Do like, share, subscribe, and comment. Join the mentorship batch webinar series Signals channel. Reach out to me for any of your queries. Thank you very much.